So the topic here is the 5 things a mortgage lender thinks you're doing wrong as a borrower.
Yes, right. You're a potential buyer. Here's what I think.
Yeah.
As mortgage lenders think you are doing wrong.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Number 1 on my list is choosing a lender where you're putting too much focus on the interest rate.
Okay.
I mean, that seems, well, is that a little weird? No. And the idea here is there's far more to the transaction than simply the interest rate you're getting. Could be fees, right? If we're going to focus on money, we need to focus on what are my fees and what's my rate. That's super important.
Yep.
But here's the thing that people don't do a good of shopping for at all, which is service. Shopping for service is as important as shopping for interest rate.
Yep.
And they don't do it. And I think it's a huge mistake that people are making basically every single day. Number 2, you keep a secret thinking that if we don't ask about it, it won't matter. Okay. And that's a mistake. Okay.
Yeah.
That's a great one.
Yeah.
Thank you. Thank you very much. Yeah. It's one of these
Elvis the
things,
lender.
like I've had people go through the loan process and secretly change jobs and never mention it to their agent or me.
Oops.
And guess what, guys? We discover that, right?
Yeah.
Everything gets found out. Keeping a secret from your loan officer, especially, is not in your interest and can come back to bite you in a big way. So the idea that somebody can pull sort of a fast one or leave something unsaid that is financially important, it's going to matter. It's going to come up, and then you'll have to deal with it when you have less time.
It's a great point. Yeah, changing jobs or going on vacation or
Yeah.
what all that stuff. Yeah.
That's a problem for
Gotcha.
sure.
Okay.
Number 3, you wait too long to move your money into place.
Okay.
And the idea here is it's very frequent where, down payments and things, the money you spend on a house can be quite a large amount, and you may have that money spread around 10 different accounts. All right. What happens in the mortgage process is if you start moving this money around, now I have to paper trail every one of those individual moves. And so if you're moving it from 7 different accounts, that means 7 different sets of paperwork that you have to now get me and make your process not more or more or less likely of approval, but simply how much effort you're going to have to put in to get me the right piece of paper, right?
Right.
So it's far simpler if you move your money into place in advance of the house purchase process and then go forward. It'll be much easier for you and eliminate some paper cuts.
The term I've heard is seasoning the funds or something,
Sure.
something like that, where they need to know where. Yeah. So if I have all the money tucked under my mattress at home,
That would not work for a house purchase.
okay, you need to know where it came from.
Right. This is big in the crypto world.
Right.
You have your money in crypto. Well, is that usable? Sometimes.
Yeah.
And if it's set in the wrong format, let's say it's just you have it on your own flash drive, for example, you have your Bitcoin stored there, not in any kind of central brokerage warehousing facility that might be out there. So I can't get a bank statement from you to show that you own these stuff, and it's not compliant for lending standards, so that becomes a big problem and blocks you from doing things. And so pre-planning goes a long way when it comes to the money.
And
Number 4.
Number 4.
You change your behavior in the middle of the home buying process.
Whoops.
So when I qualify you in the beginning, you're in a certain position in a certain thing. Well, okay, what I have is people who sometimes say, oops, John, I don't have that money anymore. My brother came to me and needed to borrow $7,000, so I gave it to him. In the middle of the process.
Ouch.
That causes you problems. Oh, I want to change jobs. I got this really good offer. I want to do it. Well, that changes your qualification.
Okay.
Here's one of my favorite ones, which is you go on a 3-week worldwide vacation where you don't have internet access. That's a problem in the middle of the house buying process.
Yeah.
Don't do that.
What's the 5th, John?
5th, the mistake you're making is by taking the mortgage process personally.
What did you mean by that?
Well, Mark, I'm so glad you asked. Surprisingly, you may not be aware of this, but when they decided the rules for what I can do in mortgages and what paperwork I need to ask for, they weren't thinking about you at all.
Yeah.
They were designing a set of rules that made the loan safe, right? And so what I run into a lot frequently is people start to take it personally, and they can get offended when we run into an issue with the approval and we ask deeper, harder questions.
Yeah.
I asked a friend, and he said, "You're incorrect. No one else has been treated that way, just me."
Right. You know, it's you. I'll tell you honestly, it more often than not comes from those who have a sense of entitlement. Like, I make a lot of money.
Right.
Why are you questioning where this $3,000 came from?
And I've heard that a lot, John,
Yeah.
to reinforce what you're saying. I heard a lot of people who said, gee, but in the past, all I had to do was sign a piece of paper
Right.
and I can get the money. Well, we got in trouble doing that in the mid-2000s.
Sure.
And so now everybody falls subject to these rules, and
Right.
they're not going to make
I'm
exceptions.
putting 50% down on this purchase. Why are you asking me these things?
Right,
Why
right.
do I have to prove this? I'm putting 50% down. Well, it's illegal to give you a loan based upon just your equity position in the house.
Right. If you don't have any income,
Right. If in the state of Nevada, there's a law that says I must prove or verify that you can afford the payment that I'm giving you, regardless of the equity position.
Right.
And that was put into effect after like the financial crisis, where people were unscrupulous people were going out there and doing loans with the intent of taking the property from people.
Right.
Like, I'll give you this loan because I know you can't afford it.
Yeah.
But there's a lot of equity. I want to make money.
Do you know the penalty on the lender if they don't do that?
I believe it's death.
No, it's not death. It's not death, but it is pretty close. In their view, it's death, because if they can prove that you gave me this loan knowing I did not have the financial wherewithal to pay it, house can become free and clear.
Yeah. My mortgage gets extinguished.
Whoa.
That's the risk for the lender.
Holy cow.
If it's ever proven that you should have never been given this loan. Wow. Yeah.
It's a scary, bad thing. And this comes, you know, I've had people tell me, John, I have never paid a bill late in my life.
Right.
Why am I having trouble getting this loan?
yeah.
Well, because you're failing some other factor that we were looking at besides your payment history.